let's talk a little bit about the loan products. So one of the more common ones, FHA.
Yes.
So let's talk about FHA. I have a couple of notes here for you, but tell us a bit about FHA.
So FHA is backed by the Federal Housing Administration, so it is a government loan. It allows for as little as 3.5% down payment. That's 3.5% off of the sales price of whatever the property is. And then usually another 3.5% would be needed on an FHA loan for closing cost and prepaids.
Okay.
So, for instance, $200,000 sales price, 7% total for an FHA loan. They're looking at about $14,000 to come to the table. Why FHA? So FHA has more flexibility with the debt to income ratio that we were just referencing, Ronnie.
Excellent.
I've seen as high as up to 57% of their total monthly obligations plus the new payment divided by their income, and I've seen them approve it.
Wow.
Now, that's not a normal, but they had a lot of compensating factors. They had plenty of money in the bank. They had been at their job a long time. They had decent credit. So a lot of factors go into allowing a debt to income to go that high.
Fantastic.
But FHA is more flexible with that debt to income, and they're also more flexible with credit scores. We've actually seen a credit score down to a 580 on an FHA loan.
Be approved.
Correct.
Wow.
Yeah. Now, I will tell you, if it's a 580 credit score, they better have a whole bunch of compensating factors we just talked about.
Yeah, because the underwriter's looking at all these things, right?
Yeah, they look at it all.
And the one thing I have here that to me is a big thing when I advise clients and I ask them, "Are you pre-approved?" Yes. What are you pre-approved for? FHA. Great. You know it's a primary occupancy loan.
Correct.
So what's a primary occupancy loan?
So a primary occupancy loan is one that you have to live in. So there's a disclosure that is actually signed at closing by the buyer that says that they will occupy the property within 60 days post-closing, after closing. And they can and will hold people's feet to the fire.
Yeah.
The number one fraud in the United States of America is occupancy fraud. So I have heard of lenders actually knocking on people's doors to make sure that they had moved into the property.
Yeah.
Now that's a little extreme, but
and that it isn't someone's investment property, a rental property that they're just saying is a first time or a primary occupancy.
Yes.
Property. Wow.
Yes.
So for FHA, another interesting thing I tell my buyers is no condos.
Correct.
There's
like maybe 2 in all of Central Florida that are FHA approved. There are a few. If in the event that one of the agents needs to see the list, all they have to do is call the Julia Bell team. We'd be happy to hook them up with the PERS approved list along with the FHA and VA approved list.
But I will tell you, don't even bother. Because it's very short and they're not great.
Yeah.
They're not great. So as a general rule, I like to say very limited to no condos for FHA loans. And there's something on FHA called PMI.
Yes.
What is PMI for those of us that are not mortgage professionals?
Yes. So there's upfront mortgage insurance on an FHA loan, which is 1.85% of the sales price. And that is an upfront fee that's rolled into the loan amount. And then there is a back end monthly mortgage insurance premium of 0.85% of the loan amount, and that's monthly. And with FHA, this is the downside to FHA. They cannot ever get rid of the mortgage insurance, the monthly mortgage insurance, unless they refinance the home.
That's right.
So if you came to me or one of the agents comes to us and they want to talk about, hey, this is my best friend. She's a first-time home buyer. She's got great credit. She's got about 3% to put down. I would say, you know what? Let's put her in a conventional loan because she will have the opportunity to drop the mortgage insurance later as opposed to somebody who gets into an FHA loan.
And for those of us that are just, along for the ride here, the PMI is just a fee that you're paying every month and you can never get rid of with FHA. It's just a fee to the lender.
Correct. So
it doesn't go towards principal, it doesn't go towards interest.
Right.
You're just paying it.
Yep. And it's a security in case of default.
There we
so
go.
In the event that a buyer defaults on a loan, the lender wants the security that it's going to be paid.
Yep. Well, there we go. Those are the main parts that we're talking about with FHA. A great loan. Use it all the time. Very available. Again,
Yes.
lots of flexibility. And so there we go. FHA.